You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That rockin' tune means it is time to rock out and talk some futures options. Yep, it's time for TWIFO. My name is Mark Longo. I love this time of the week because we get to talk about all sorts of fun stuff, maybe some ag, maybe some energy. Let's try that. It's the end of a shortened holiday week. Still been a lot of talking going on already so far this week. You never know who's going to make it on the show. That's why it's such a fun one. You got to join us every week live every Thursday, 1:30 p.m. Central, 2:30 p.m. Eastern. If you do that, you can see who I'm joined with. Unfortunately, this week, no delicious steak buffets or gourmet hamburgers in the studio. Unfortunately, Sean's off. I think he's off in Amsterdam this week. Guy's got a travel schedule that I do not envy. The guy's all over the place, hither and yon, as usual. But joining me to help me hold down the fort this week, my usual compatriot, my partner in futures options crime, the yin to my yang, Mr. Nick Howard from Bantix Technologies, the creator of Quick Strike. Mr. Nick, welcome back. How go things in the land of striking quickly?
Oh, it's going good. No steak, but I'm going to be eating sushi while you're talking because I just come from meetings all day long. So we got sushi. No delicious steak, but we got delicious sushi.
All right. I'm not a huge sushi guy, but I could see what you got. If you want to eat in privacy, I will mute you, sir, so that you can.
No, don't mute me. I'm not going to eat while.
Okay.
No,
all right. I want to make sure.
I'll self-mute.
I don't want you to have to share your sushi with the world, but
I'm good. I got it covered.
All right. Since you're joining me today, Mr. Nick, I'll let you roll the dice. Where do you want to start this week?
Let's see what's interesting. I think that, we can do either of our gold or our oil would probably work. I mean, it's been an interesting week for those things. So let's start there. And why don't you jump off and do your thing?
I'll jump off. You have a couple of bites of your sushi, and then I'll toss to you when you're ready. But yeah, it never hurts to start in Texas tea or in the shiny stuff. I happen to have the Texas tea open on my screen, so I guess let's start there, listeners. Coming into Showtime, of course, the Texas tea, a.k.a. WTI, at right about 64 even, just a tick under it, 63.99. So again, kind of a quiet end to a relatively quiet trading week. We do, of course, have a holiday here in the U.S. on Friday, so that kind of, a lot of people are already heading out to Dodge. Not a lot of stuff going on for a lot of the different products out there. And we're seeing that at least in the price action reflected in the crude as well. Going across the board here, it looks like, as you might expect, heading into any sort of truncated trading period, you're seeing vol coming in. That's pretty much the case yet again. We're seeing vol coming off pretty strong in the nearer portion of the futures curve. A little bit less so as you get a little bit farther out. Again, that's to be expected. Calmer heads prevailing the farther out you go. I'll let Mr. Nick break down his shifting and his sliding, because that is his baby over there. Instead, I will turn to what is lighting it up. Again, a fairly quiet week. OI up about 4%, so that's not bad. But you could tell when you're looking at the numbers here that it's not exactly a rock'em sock'em robots week. The June's lighting it up with 52% of the paper this week. And the number one trade is the 72 calls with a paltry about 9,000 contracts. Usually we see more of that for a WTI out there. So let's break it down here. 72 calls, about 9,000, 8,900 actually, to be precise. The lion's share actually coming yesterday, nearly 5,000 of that coming yesterday. The rest kind of scattered throughout the week. Slightly opening, about 2,000 and change. We have a good question about the open interest. I think we're going to get to that in a little bit later in your futures options feedback. Outside of that, we got, 60 puts coming up number 2 with about 7,000 of those. Number 3, almost 7,000 and 68 calls. So pretty much a little call strip with some puts mixing it in. And then we got going out here to July, we've got the 68 calls doing about 6,000 contracts this week as well. So those kind of your top positions out here this week. Mr. Nick, in addition to your tasty, delicious sushi, what is anything catching your eye out here in the Texas? Oh, before I even get to that, let me break down what we saw going on out there in the actual underlying this week. We saw the stockpiles in the U.S. falling for the first time in about a month out there. So that's been data a lot of people have been keeping a keen eye on. Of course, we're still seeing OPEC cuts doing what they wanted. They're keeping it up here north of the 60 handle, around 64. Of course, we got the continued issues with Venezuela and Iran both continuing to kind of support those price levels as well. So that kind of 1, 2, 3 punch all combining to kind of keep us at the levels we're at right now. All right, now, Mr. Nick, what's going on in shifting and sliding and skewing and all sorts of fun stuff in the land of crude, sir?
Well, we got some spicy going on in the spicy tuna, that's for sure.
Now, I find hot spice is very conducive to talking. What do you think?
I like it.
The more it burns, the more you want to talk.
Yeah, I do. No, today it's a weird week for crude. Like $1.30 and change price range. A lot of conversation throughout the week if they can get through the 65 strike. That we'd see continued upside, but what we're seeing here is basically sideways. There wasn't a great deal of movement, and when you get sideways movement, when you get no change in strikes like you're seeing in the TWIFO report, no change in strikes over the course of a week, and when you have $1.30 range, that only means one thing. That means vol's going to come in, and if you look, you have no slide, you have all shift, and it's a 1.5% that comes in this week. So a real sit down on the vol. And again, the shift and slide. Today's a good day to see it. You don't have much move, no change in strike. You see pure loss in volatility, and it makes sense. It's kind of a no nothing, no news week. Even with those numbers you're talking about, there's no change. Vols in. So with that, we're also, when you start to sit in these ranges too, like we talk about, then you start to get the volatility curve to sort of maybe balance itself out a little bit. So we see that a little bit in the June contract. It's got about 28 days. We'll still give that some value, that the calls got less cheap and the puts got less expensive because it's almost 30 days. But we're going to see that across the board for the most part. We saw the calls get a little bit more bid and the puts get a little bit more offered. And if we were to see this range again for another week, we might see the same thing. And then at that point, then we got to start. Or if the puts continue to hold their bid, that means the bias is going to switch the other way. So right now, nothing too exciting, but important to note that there was a lot more expectation, I think. Again, don't know why for the upside, but we sit here. The more we're going to accumulate strikes around the money, the more we're going to see the 65 become more important as a resistance. And if we got through that, a support. But I think that is crude close tomorrow too, or is it just the U.S. equities, or is everything close tomorrow? I don't even know what the usual schedule is. How does that work?
I'm sorry, I was getting messages here in the studio. What was that
No,
you're asking?
I mean, is every market close tomorrow, or just the equity market?
I think primarily equities, but I think I'll have to look and see there's a CME circular and exactly what is closed.
Yeah.
So I'll check on that.
They were off tomorrow, but I don't know if that's just because the exchange employees are off doesn't mean the exchange itself's not. But it must not be trading. It's got to be a big holiday. So yeah, so we got 3 days of sitting around. Vol's going to probably open up softer on Monday after being soft all week, especially if we have no movement in this. So, it looks like crude, we're kind of in a mini range here, and it'll get interesting if we get vol in again. Like if we get under 20% next week in that front contract, you have to start paying attention and put some stuff on that's going to play an eventual move.
Speaking of movement, let's see if we got any in the shiny stuff this week. Let's go on over to gold. I know all the gold bugs, all the gold bulls out there. We're hoping for some sort of resurgence back to close to that 1,300 level. Didn't get it this week. In fact, you saw the opposite. You saw a sell-off of about 20 handles going back coming into Showtime, I should say, off about 1.5%, right around the 1275 handle coming into Showtime. All this downside, though, not translating into any volatility. I know a lot of our equity-themed listeners, they automatically associate downside with volatility. Not always the case, listeners. I mean, the skew is different. We've broken it down many times. That's what makes the futures option side of the fence so fascinating. It differs by product and indeed even by month and even week by week sometimes. So that makes it kind of interesting. This week, even though we're seeing some downside and a fairly substantial amount of it, a vol coming off across the board here in all things shiny. Let's look out here to see where the fun is being had in the shiny stuff this week. It looks like a lot of the fun, about not quite a third, a little more than a quarter, a little over a quarter was coming in the June expiration cycle. Let me just scroll down really quickly. Yeah, there's some farther off stuff, but not as much for some. Oh, actually, and I take that back. I lied. I buried the lead. The lion's share of the paper by a lot more. Nearly 40% was coming in that May contract, which is going out in about a week. And it was the 1270 puts, which are pretty much slightly out of the money puts right now. That's where the lion's share of the action was, nearly 18,000. So quite a bit more, nearly 3x more than some of the other ones that were lighting up the tape here. 1270 puts, trading pretty actively all week as well. Nearly 6,000 on Monday, about 4,500 on Tuesday, 3,000 on Wednesday, and about 4,500 again today. Bias towards opening, again, not surprising, about 5,000 of that. We're starting to move down. People want to get some puts on. I understand all that. These are near term, though. It's not like you're looking for some longer term downside protection here. You're getting a week with this, and that's what we've seen in a lot of products outside of the energies, really. We see a lot of, shall we say, there's no reticence to really dive into shorter dated contracts here, and we're seeing that again right here. Then number two looks like it's a bit of a tie, right around 8,500 each for the 1,300 calls. So even strikes still captivating the mind, about 85, almost 8,600 of those. And then the 12 double puts, the 1255 puts with about 8,500 of those as well. The lion's share of those coming on Monday, 5,000 of the puts. The call is a little bit more even paper with decent paper on Tuesday and Wednesday out there. Let's just look as we like to do. In gold in particular, that's where, shall we say, the weird, the aberrant, the interesting paper sometimes likes to raise its interesting head. Let's see if we see this. That's why I put it on when I go to CME Group/Twifo, or however you get yourself, the Quick Strike listeners, quickstrike.net, bantix.com, however you log in. I don't judge, but however you log in, when I do that, I like to select all expiration so I can see. I know Nick says, don't do it. It's too much. It's overwhelming. It'll blow your eyes away. And it is. But you see some fun nuggets when you do stuff like that. Like the 1,100 puts, tearing it up. Today, actually, out here in, where are we? In Deeks of 2019, doing nearly 2,000 of those on the tape today. So if you're thinking it's all near-term action, nope, Deeks puts 1,100. That's pretty decently out of the money. Also seeing far upside. If your game is to the upside, we got you covered. That seems to be where all the longer-term action usually congregates, is on the upside. The bulls out in force. We saw that again on Wednesday, looks like, and again today, actually, with the 1,700s and the 2,000s going up in, June of 2020 here. 1,000 of the 1,700s on Wednesday and 1,200 of the 2,000s, both opening. Maybe a vertical going up, 1,700, 2,000. That would make more sense than just, also 15 halves are went up as well, and 18 halves. So 15 half, 18 halves went up for 532 times. And then I got 1,064, so it actually looks like maybe a little bit differently. It looks like it may be 15 half, 1,700, 18 half fly went up 1 by 2 by 1, 532 by 1064. That makes more sense. It looks like maybe we got a 2,000, I should say, kicker on top of that, 1,200 times, that's kind of in keeping with some of the crazy gold bull paper we've seen of late, where they have those weird, extremely outlier kickers to them. So that one could fall into that. We also saw more of that paper going up today. Not quite the same ratio, but looks like the fly went up again today. 15 half, 500 times by 1,000 of the 1,700s, by 500 more of the 18 half. So it puts them at 1,000 by effectively 2,000 on the fly, listeners, with that weird 2,000 paper, maybe not unrelated. But weird stuff. Mr. Nick, what's catching your eye this week in gold? And this is why I like to see all the expirations, Nick. Sometimes if you don't do that, you miss these little nuggets that lurk way out there in the ether. What do you think?
No, I'd agree. I just think sometimes, for me, you're not really making decisions on volatility out there so much. I mean, you could see the term structure and see what's going on, but those long-term bets, I completely understand what you're looking at. But I like to, since most of the volume is going on in the early stuff, that's where I tend to pay attention the most. But I think the continued story in gold is the fact that I'm looking at the 3-year, 30-day implied volatility chart. Right now, the June contract is 39-day, 40 days to expiration, but we are just on a downward, and we have talked about this for a long time in gold, but we are near or at 3-year lows, and I could probably go out even further, and we're at lows. And what you're also seeing here is if you have the subscription version of Twifo, what you're seeing here is we have a very balanced volatility curve, meaning that right now we've moved to the belly of the curve. The at the money is pretty much the lowest point of volatility. So I'm going to look at the June. I was looking at the 30-day. So if I look at the June and I look at the buy strike curve, we're not quite in the belly. And I think that's what made the 1270 so popular. It's in May. I understand that. But the 1270 strike, when I talk about gold, is the one I like to focus on of late because it is the cheapest strike on the curve. And we have at the money vol presenting right now is under 8%, and the 70s probably around 8, a little under 8% as well. But that's the cheapest spot on the curve. But when you look at the curve, it's like a full-on, have a nice day smile, right? The yellow guy with just a smile in the eyes. It's balanced. So there's some And obviously the curve's telling us vol is going to go up if we continue to go down, and vol is going to go up if we go up. So we got that balanced smile. And I've talked to people, and some people think 1255 is sort of a next step or the farthest we can go down. We've seen one thing we're going to be doing pretty soon is really kind of measuring the ranges over time to see. We're gonna do a variation of the rent control of the rent report that we talked about. But gold moves in this range, and the range trades. And we could just as easily be back up at 13, 15, or we can, we haven't been down into the 20, into the 40s or the 50s in a little bit. But gold moves, vol's low. You can capture those moves, but we do have periods of time sitting around and just kind of trending back and forth. Right now, the June contract is the cheapest on the term structure. Even May, again, we talk about this all the time. As you move towards expiration, you sort of expect that front contract to be bid from a volatility standpoint because people are willing to kind of pay the same price over time for the premium of that straddle, but we're seeing it decreasing. And it's full on decrease. It's offered. We have a little bit of a slide, but we have basically everything's a shift. So we have a 3-day weekend. Nothing's generally going to happen. Going to get even softer. So next week you really got to start to pay attention to gold vol and start to look for places or plays that will give you an opportunity to make a move happen for you. So in this case, given you saving on premium by looking at a strangle or something like that might be out some 15 or 20 deltas to capture a move in either direction, but also to capture the fact that the volatility will get bid if we move in either of those directions. So that's I think the name of the game right now, because it's funny, if you look at the news, a lot of thing is like a lot of the newsletters saying this increased volatility, and I know a lot of that tends to be towards the equity market, but volatility in commodities, at least in the metals and the energy, it's getting hammered pretty good, and that's because we're trading in ranges and because we're not moving outside these points that people need for things to really become a gold bug again, that kind of thing. So wasn't a good week for gold bugs, and not a good week for volatility people. Although you probably could have made your money back on gamma if you were long from where we started from an option standpoint.
Can you be a gold bug at 1270? You got to be a gold bug at like 1700, right? 2000. That's where the gold bugs are playing, right? That's where it qualifies as gold buggishness, I think.
Well, aren't they all just gold bugs? Are just kind of like the perma bears in the equity market?
Pretty much. I've seen some of the angriest I've seen people get is when discussing any sort of bearish activity on gold. All of a sudden, oh my God, how dare you? What about these 18 bullish scenarios? So there's definitely a defense force out there for the gold bullish upside. We were talking before about whether or not CME is closed. It is closed on Friday for a Good Friday. So in case you're wondering, a couple of markets open, closed across the board Saturday and Sunday normal hours. So just Friday. That's for our holiday here in the U.S. So if you're looking to play some contracts tomorrow, unfortunately, not going to happen. But it's good to have a little respite. And it's good to have the whole market closed. That means you're not missing out, right? So you can go hang out with your family, do fun stuff, whatever it is you do on those days when you're not at your screens. Mr. Nick, we talk a lot of gold and a lot of crude and things. I'm feeling kind of green. I'm feeling kind of aggy. Are you with me? You want to jump into some ags just for fun?
We could do some aggies. I haven't. You know what? I got to admit, I'm afraid of the ags. It's just
it is an intimidating complex when you first kind of come to grips with it, right? Because there's so many different products on their own different planting and harvesting cycles, and there's different data cycles in terms of crop reports. So it is a lot to kind of wrap your head around when you're first. That's why we've kind of been drilling down into soybeans for just because A, it's so central to a lot of the other macro stories that are going on. And then B, it's an area a lot of our listeners can kind of drill. But I mean, people like wheat, people like corn, like other stuff too. We could do a whole show on ags. We have. But let's hit on the beans right now. Let's check in. Let's do our beans check-in. Get the ags folks out there something to sink their teeth into right now.
It's been a while, so let's do it.
Yes, there we go. See, that's why I keep you off mute for the nuggets like that, sir. That's what we're missing.
Guy like staying off mute.
That's what we're missing.
More fun.
You got a hot mic. I'm scared. The world's a little nervous. But
done. Sushi's done.
We'll see.
Clean.
We'll see if you can handle it responsibly, sir. Nuggets like that, that isn't the worst. All right, let's see what we got here in the beans. Yeah, actually some decent data coming into this week. Big jump in imports for the beans, U.S. beans, I should say, out of the EU. We saw figures out of the EU showing their imports increasing by 121% over this time last year. So this is pretty much July through mid-April. So the same period last, that's a big jump. You think that would be, some sort of bullish sign? And also the data revealing U.S. imports now accounting for 72% of EU soybean imports, up from about 36% last year. So, the story has been predominantly been China, China, China when it comes to the beans, but these data coming out of the EU would seem to be pretty bullish. And yet that's not what we're seeing here this week. The beans taking a pretty decent breather, actually, off about 14.5 handles, or about 1.6% coming into showtime, right around the 880, 881 strikes out there. Vol, as you might imagine, with a lot of that red on the screen, coming up a bit. So obviously there's a bit of bid to the downside, which has kind of been the case in beans for a little while here. And up pretty strong, actually, this week. So I guess this data, not enough to mitigate the sell-off out there. Let's see what we're seeing out here in the beans. Oh, it's a similar story to the gold, Nick. All the actions in the front contract going out, in about a week. I said we're at the 880 strike right now, right around 880, 881, and it's the 880 puts that are lighting it up here in the front contract here, doing 12,000 contracts this week. Nick, listeners, the Lions actually yesterday on Wednesday, 6,300, about 3,400 on Tuesday, and about 1,700 today. A lot of that closing, actually, so maybe hopefully people had some decent put positions on, and they're taking them off, taking some winners off the board, hopefully, here coming into that. So, I mean, this is not exactly an unexpected outcome to see, the beans retesting these levels. So, hopefully, if you're a producer out there, you had some concerns, you had your puts on, and it wasn't a bad outcome for you. Let's see, number 2 here, though. It's not all puts all the time. The calls also doing decent paper, about 10,500 of the 900 calls. So slightly out of the money calls, decently out of the money calls there. 4,300 on Tuesday, 3,500 Wednesday, about 1,000 today. That looks like a back and forth trading, only slightly biased, slightly opening. So a lot of back and forth on that even number call strike. And let's just jump around here really quickly a little bit as well. I got 890 puts, 870 puts, all the kind of usual suspects. Let's jump around a little bit, see if we see anything particularly outlandish or out of sorts. Decent paper, June 920s. That's not too crazy. Ooh, 760 puts. Here we go. These are out here in July. July 760s are pretty active. Actually, I take back what I said before. The July 760s are the number 2 contract out there with about 80, actually number 3 behind the calls. So it was 880 puts, 900 calls, then the July 760 puts with about 8,700. So close to the calls, not quite beating it. All of that coming on Wednesday, 8,000 of that coming on Wednesday pretty much. A big day, all opening. So someone opening for size to the downside here on the 760 strike in July in the bean. So that's interesting. Maybe perhaps portending of more downside to come. Maybe they're overwriting down there to the downside too. I'll have to dig in there to see. Either way, interesting stuff. Mr. Nick, I know we haven't talked beans in a while, so this is a good opportunity to talk some shifting and sliding. We haven't done this, I don't think, in beans since you launched this tool. So let's do it now. What's shifting, what's sliding, what's catching your eye in the land of beans, sir?
No, looking at the vol curves, we have a little bit of shift and, vol up a little bit on the vol up on the shift and a little bit up on the slide. But I think that's not so much what I'm noticing is I notice here the same thing I see in gold, the same thing we see in crude, that we have this sort of almost a perfect smile for the vol curves. And again, Mark, as you know, having been market maker for a long time, that, that means there's definitely some uncertainty from a directional standpoint.
We're flipping coins now in the beans.
What's that?
I said we're flipping coins now in the beans. Nobody knows where we're going.
No, I'm saying, you just, when your curve looks like that, now you talk about what do I buy? When the curve looks like that, maybe you buy straddles, right? Or tight strangles or something like that, because
someone's going somewhere. Yeah, I said, something's going somewhere. I said, yeah.
Yeah, something's got to go somewhere, right? So, I mean, not that, and you got to look. Vol's up this, Vol is up this week. Vol is also up today on the move. So I don't necessarily, that's not a call that you make here in the beans, because I don't watch it enough. I don't know. But it's interesting when you see three different asset classes with similar vol curves, which kind of put you in, just observationally from the bean futures, it's been a downward trend, albeit kind of slow year to date so far. So, and the highs over 6 months, they, year to date, they started up near the highs, and 6 months ago, they were around that same thing with the break and a come back up. So we're at a point here where puts and calls are balanced in terms of their bid. There's a little bit of, if you look here on the TWIFO report, you see calls are firm above the money, not quite as firm above the money as the puts, but you get my drift. There is a smile, and it's getting more balanced, which means to me that there's not a lot of expectation one direction or another, or we're in a trending market. And when you start to get in a trending market with not much of a range, then you're going to see vol come off even further. And while we're on the phone, I'll take a look at the 30-day volatility, because the June contract has 35 plus. But if I look at the 30-day at the money volatility over the last, let's see, what's my date range here that I had defaulted on? I think I have it quite a bit here. I think I have 5 years, which is not going to be a great thing but even looking at beans over 5 years, we are at or approaching 30-day volatility lows. So that in and of it's outside of the fact that today that we're up a little bit. So if we look at the end of the curve, we're going to see a little bit of a bid, but we're on lows. We're balanced from a vol curve standpoint. So that means, in my book anyway, that means you pay attention with the possibility, if we do get something directionally significant, then you have a chance to make some money on some vol.
That is the case. Let's move now from the maybe somewhat scary world with some of you out there, the ags. We'll get back. We won't scare you anymore. We'll get back in a little bit more familiar territory. We'll go back into the equities, where we like to play every now and then as well. Coming into showtime, let's kick things off in the land of small caps. In fact, let's compare and contrast, shall we, as we are wont to do on the old program. Let's look at the vol first. VIX cash coming into showtime, aka the S&P vol, around 12 and a quarter or so. That's off about a point from our last show. We're seeing RVX, which is the VIX of the Russell 2000, off about 3/4 of a point. So we're seeing that spread moving a little bit. It's actually looks like about roughly half a point wider between the two of them. And looking out here to, it's about 3.75. Was about 3 1/4 or so around last show. And let's see here, coming into showtime. Looks like Sean's myriad road shows are paying dividends here, Nick, because assuming the S&P, the Russell's at about 1570 coming into showtime, off about 20 handles. So we're seeing decent on the week here. So we're seeing a decent little pop in vol, not a ton, but a little pop in vol. In net, though, we've seen vol come off, of course, since our last show. And then the action, once again, we were talking near-dated contracts. The equities, they love the near-dated stuff in the equities. Pretty much the lion's share of the action when you're talking and analyzing activity in any given equity these days. It's going to be in the weeklies, and that's pretty much what we're seeing in the Russell. Again, the contract, a weekly that's expiring in a few minutes, is leading the dance here with a decent 1,600 calls, 1,545 of those going. That's a pretty decent print for a relatively new contract out. And when I started listing, we were seeing 50 lots and maybe some 100 lots. Now we're seeing multiple thousand lots going up. So it's been a change in an order of magnitude going up here. A lot of that on Wednesday, and on Tuesday and Wednesday was where the 1,600 calls were lighting it up. Given that it was in the weeklies, actually looks like it was opening on Tuesday and then maybe closing on Wednesday, but doing more size on Wednesday. So maybe they were trying to spec a little bit when it didn't come to fruition, closing it out, and maybe flipping in the other way, maybe a little bit overwriting going on Wednesday as well. Either way, near-term upside. I'm going to go out on a limb. If it's at near-term, probably say it's probably an overwrite, and seeing a lot of that's where the lion's share of the action was. I'm going to jump out really quickly to the good old E-mini S&P as well, see if we see a similar trend in the paper flow out there. Again, listeners, you guys can play along wherever you get the old Quick Strike, including cmegroup.com/TWIFO, Bantix.com, or quickstrike.net. Remember, no C in it, QUIK strike.net. Let's see here. S&P off less than. So small caps feeling a little bit more of the downside this week compared to their large cap brethren. Vol, not quite the same story, off a bit, off quite a bit actually. Since our last show, I kind of just laid it out for you here in the S&P. In the near portion of the curve, obviously taking the lion's share of the beating, but that's mostly gamma. You get a little bit farther out, saner heads prevail. And it looks like, yeah, you know what? We're actually at the money calls. We're at about 29.10. Now, I take that back. Actually, it's farther out. The active money calls, 29.10 is where we're at right now in the S&P coming into showtime. 29.10 calls going out in a few minutes are pretty active. Nearly 20,000 of those in the E-mini, but it's the 2,600 puts. Actually, no, I take that back again. Go farther out. Go all the way out to the 2,700 puts. This time out there in September, that's where the action was. 89,000 of those bad boys going up, 80,000 of them on Wednesday. So a lot of action there. 40,000 of the 2,600 puts, 40,000 of the 2,800 puts. Looks like a fly went up there. 26, 2,700, 2,800, 1 by 2 by 1, 40,000 by 80,000 times. So that's probably going to account for the lion's share of that paper. So big action in a downside fly in September, and upside call overriding is where the action was in the Russell. Mr. Nick, anything catching your eye in, shall we say, the saner world of equities, at least compared to the ag, sir?
Oh, I have to go back and turn off all the expirations I turn on to look at it. How that table is just crazy.
See, it's a lot. It's overwhelming, but I kind of like it.
It is overwhelming. Are you in? Just let's ask. Are you in dark mode or in light mode right now?
I'm in light mode right now because it's during the day. I'll go dark at night when I want. I want to protect
so my actual
my precious beauty sleep.
Like a villain, right? You Dr. Jekyll. You'll know this because, and I'm digressing. Who's Dr. Jekyll and Mr. Hyde? Which one is Mr. Hyde's the bad guy, right?
Mr. Hyde is the bad guy. Dr. Jekyll is the nice, mild-mannered doctor. He's a psychiatrist or whatever he was that was experimenting with that. And then Mr. Hyde was the alter ego that would come out to wreak havoc.
Right. So you're in your Dr. Jekyll mode right now.
Yes, I'm in the nice. Yeah, no one would suspect. No one would suspect that nighttime comes, I go dark, I turn on all the expirations. It gets crazy in here.
It is, and you just get a lot of green and red and white. It's like the Italian flag and the dark mode when you're in there, because those are the only three colors you're going to see: green, white, and red on the black. And there's other flags but I'm Italian, so I say
you got me intrigued by it again. I'm going to try to enable it. I'm going to try to. How do I do it quickly here? I'm trying to see.
Just go up top left to that little next to quick strike, right? The three little bars above the logo.
Oh, there it is, right there. Okay, yeah, there we go. Use dark
mode and dark charts.
There we go. Apply. I'm going dark right now. I'm a little scared. As scared as you are for the ags. Oh, I like that now. Yeah, I don't do it in the middle of the day that all. I've done it at night a few times.
We got so many requests for people that wanted to match their other trading platforms.
Yeah, you're right. They are all black. In fact, looking at our mixing software that keeps the show running while we're talking, that's all black. So this kind of does fit in with. I have been known to appreciate a good dark web design. And hey, you're saving power, right? So it's green. It's green friendly.
It is. It's grown on me quite a bit. So anyway, but anything interesting here? I mean, again, what I tend to focus on is I'm going to look at the contracts that are a little bit not under 14 days to expiration, and as Mark mentioned, the weeklies that used to be serials. So those are they're not real. They're weeklies, but they're not really weeklies. That's just the way they changed it there. But I tend to just look at how the skew is changing, and again, we talk about all the time how the skew doesn't change that much, but we do get occasional tightening of the channels, and right now. We're not seeing too much happen there. And again, more importantly than is the long-term trend with, let's put this week 3, which will be the change in the May serial. Let's see. So vol is down on the week, but let's see what this vol looks like over time. So, everything has just been kind of trending downward. And this is for that contract, but if I go in the quick vol and take a look at the 30-day, which is, again, going to sort of be an agnostic volatility measure, it's kind of taking some of the, the specifics of a particular contract out of it, we're not really on our lows. We've had some spikes up where we've seen lower levels, and we've talked about lower levels right at the for much of the better part of the second half of 2018. We are at some real lows. We're not quite there yet, but we are trending down. So unless we see a move, it seems that the moves, and again, that's the way the shape of the curve is, right? If we move up, we're going to see the market, the at-the-money volatility decrease. So we're really not having too much of a volatile move, but we're really just sliding along the curve. And a majority of the vol change this week has been, well, not a majority of it. There's been some slide, but there's been shifts. So we're getting an offer as we kind of trend along. Again, it's interesting. We're all volatility. So I don't know what all these advertisements are talking about where it says in this volatile market. It's not that volatile. Not much going on. I mean, what are you guys talking on your vol views? Are you saying the same thing?
Well, it has been coming off. That's kind of been the trend of late. So we've been talking more the erosion of volatility than the spikes of volatility. You know, that's kind of at least in the broad equity. That's where we focus for that show. That the narrative has been mostly to the downside with a few blips here and there. Most of the audience, they lean dark side on that too. Speaking of dark side and that, I'm just looking at. I've been playing around with a little bit of dark mode while you're talking, and I pulled up because we're going to do. You mentioned movers, so let's do our movers and shakers for the week here over there on CME. That chart looks really cool in the dark mode. Have you looked at that?
Which one is
that?
Pull
up the movers and shakers, the 1 week performance scan. The gradients come out really cool in the dark mode. So I encourage you listeners, if you're listening along, to play along that way. Let's do it. Let's hop on to what's been moving and shaking. And man, there's a lot of stuff that trades over there, obviously, across the broad depth of CME. Let's see what the heck was lighting it up for this past week. Again, this is just futures performance. We're not talking vol or skew change. Just straight up what the futures did. Number one, let's go upside first. Let's go green. Biggest mover on the upside is palladium, up 5% this week. Follow number 2, 4% by rough rice. Number 3, Nikkei yen, right around 2.5%. Number 4, the E-mini Dow with about 1.6%. And right behind it, nearly 1.6%, feeder cattle. Round out the top 5. Let's go to the dark side of the 5. Nat gas off over 6.5%. Right now we're seeing wheat at about 4.6%. KC wheat off 3.375%. Number 4, iron ore off 3%. And number 5, the beans, as I mentioned before, off not quite 2%, off about 1.8, nearly 1.9%. So not a great week for beans. We kind of broke that down. Speaking of breaking things down, let's see what you guys have in store for us with a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, let's see what you guys got for us this week. JJack, I like it, JJack. I like JJack's question. JJack wants to know, what did Eric think? I think he meant think. What did Eric think of, I'm guessing he means Game of Thrones. Did it live up to his report? I'm guessing, okay, let me try to translate this. Eric, on the last show, we dove into equities and we profiled a winter is coming for volatility report from Eric Norland, who's on the CME research team, obviously. Obviously, he's a bit of a Game of Thrones fan. Game of Thrones was coming back this past weekend, and so he wanted to use the weird seasonality of the Westeros world to try to somehow make an analogy to the equity market volatility cycles. I think he did a pretty good job with it. Did it live? I don't know. Eric's not on the show. I'll have to ask him next time he's on what he thinks of this season again. I have not seen it myself, so no spoilers out there. Nick, I know you're not a Game of Thrones man, so I won't bother asking you.
Why would you say that?
You said last episode you'd only seen one episode, and it was too much for you.
I turn away when a singer's bad on one of the reality shows. How am I going to watch Game of Thrones when somebody's head's getting chopped off?
Yeah, there's a lot of heads flying, and a lot of other stuff flying there.
There's a lot of stuff flying. That's the thing, and it's fine. It's fine, but it's just like I'll give me the marvelous Mrs. Maisel.
Yeah, it's not exactly. You don't sit down for an hour of lighthearted entertainment when you watch
Right.
Game of Thrones. That's for sure. It's an hour of
It's not a Bud Light commercial. It's not a Bud Light commercial.
Yeah, look what they did in the commercial. They murdered the mascot in the commercial.
Yeah.
That was like a 30-second glimpse of what goes on that show on a weekly basis there. So yeah, I haven't seen the big Much Ballyhooed premiere. I've been kind of busy, but I do plan to catch up on it soon. So hopefully, and next time Eric's on, I'll be sure to ask him. But I thought it was a great report that winter is coming for volatility. I think that was it. Eric is many things, and one thing he knows is how to name a report and give a compelling title, right? He's done the gold storm on the horizon, a bunch of other things. So Eric knows how to get the interest with his research reports out here. Here's a good one. I want to make sure you had a chance to weigh in on this one, Nick. We get this question a lot. This is probably the most recent guy to ask this. I don't even know. I won't read his full handle because it looks like it's not for the kiddies. Let's just call him Chickenassluvr. Chickenassluvr. Do you know if there is any way you can tell if positions are being opened or closed intraday? Live options open interest. This is a question we get a lot, Nick, because people are used to now. We've kind of trained them in this world of executing trades. There's no more picking up the phone and waiting unless you got to execute something big in a big pit. Other than that, it's sub-millisecond, sub-microsecond execution for a lot of these things. People are surprised when they do their trade, it's executed in a second, then they have to wait a day for open interest to change. That those two things don't gel with a lot, particularly people who are the audience of this show, the active retail. It's a thing that's kind of been a bit of a bugbear. I know OCC is kind of wrestling with it. You're obviously knee deep with the data and what's going on with CME. Is this something that's even on the horizon, or can we expect this anytime in the near future?
I don't even think that you can ask that question because technically a trade is not finished until it clears, right? So, you could have two people exchange contracts, but until it actually clears, it's not officially, it's in the books, but it's not cleared, and only cleared trades get specified as open interest. What you can generally do, what we do like for the pace of the roll in the futures is as we look towards a roll occurring and get inside that roll time, we'll do averages over we'll take like the average over the last day's close and then change the open interest by that much. But you can't really do anything intraday because it's not officially cleared. That's why you don't get any of the final files until after like 6:30 Chicago time. So people have asked me, are you updating open interest? And you can't. Because I can make a trade and then close that trade, and it just doesn't make any sense until there's a final result of what's going on in each of the strikes. I don't see it unless they were doing live clearing, right?
Yeah, they got to get the clearing up to speed with it, right? That's kind of the key stickler.
Yeah, and I just don't think that would be I guess technically I just don't. My answer is no, there's not. And I just don't see them doing that.
There has been some push. I didn't mean to cut you off. There has been some push on the equity side of the fence, like OCC and others, for maybe some sort of maybe intraday update. So maybe get a noon update and then end of day kind of close update like you get now. So maybe one kind of just to update it a little bit, because you can do some basic matching and settling, obviously, when the trades go up. And but there also is pushback against that too, because a lot of the big institutional players, they don't really want. They like the fact they have a day window, right, to play with a bit. That's a cushion for them.
And the other thing too is CME does a preliminary file around 10 o'clock at night, but the final file doesn't come out until like 9 o'clock the next day. And I know the ICE, they don't even, unless you're a member, you can't even get an end of day file to see what the open interest is, and they don't push their OI until almost close of the next day. So yeah, it's not something that I see them wanting to do. CME is probably really good and efficient at it in the fact that we get it at night around 9 o'clock when the end of day comes out. But generally speaking, most people aren't seeing that until the next day. So,
speaking of seeing things, we got the creatively named Glen, a.k.a. get ready for this handle, Nick. Glen 009-15249. Wow. I guess there were a lot of other Glens before him. But he's listening live. He wants to know, he says, what I want to know is, are copper futures about to break out? Well, copper futures
to break out.
Interesting. Well, I pulled it up while we're talking in dark mode, of course, Nick. The copper. I got to say, the changes, the downside and the upside, the green, the red really pops more in the dark, don't you think?
I really like. I didn't think I would like it that much, and I do like it a great deal. It's my preferred. Look right now.
Yeah, I mean,
so.
I'm looking right now. I can see instantly. Okay, Vol's kind of a mixed bag. You can see it in the near portion of the copper. By the way, copper, listeners, not one we do a lot, not a ton of options paper, but we'll do it for you, Mr. Glen 009152249, because we're just that nice. But looking here right now, looking at the big trades out here, where the three calls, the $3 even calls. These are coming in, what are these? In the May contract here. These have about a week to go. The big trades, so a lot of those in the upside. Actually, net closing on the week. People were closing on that 3 call. Copper right now, shy of the 3 handle, 2.9215 coming into showtime. So added the 292 strike out there. So it looks like people are giving up the ghost maybe a bit, slightly, on the 3 calls. That's not exactly inspiring me that there's a huge breakout poised in the paper here. Just looking at the quick paper flow, not a ton of paper flow this week. We've been talking about copper. Obviously, the story with copper has been tied a lot to Chinese demand. First, it was Chinese demand was getting killed. Now, maybe the death of China has been a bit overstated from an economic perspective, so maybe that's going to lead to a bit of a resurgence. But I'm not seeing a lot of paper here this week, at least, Nick, that's letting me to, let's see, 3.15 call, 310 calls were pretty active as well. Let me go to those really quickly. Most of those went up on Wednesday, opening, and a little bit today. Again, I don't have where these went up, but there could be some openings. So that could maybe, if you're looking for bullish signs, that would be it. I think the more of the answers are in the skew. Mr. Nick, do you see anything shifting or sliding in the copper skew that leads you to assume, hey, someone's really prepping for a big upside breakout?
Let's see. So I wanted to look at I'm going to tweet out this aggregate open interest over the 2019 options contracts, and you see that there is some pretty sizable open interest in the 305, the 310, the 315, the 320. So there, and that's across everything that expires in 2019. Now we obviously haven't been up there, so you don't see a lot of puts, but there are definitely some positions up there, and again, for every seller, there's a buyer, right? But let's take a look. I mean, there's some open interest on the upside. So what that necessarily means, I'm not sure, but there's definitely some bets going up there. But I'm looking at the vol curve again. I'm looking at the May. Let's see, that's the May contract. Let's look at the June contract because that has something that's more relevant from a day standpoint. And, we're kind of in a similar situation where we have a pretty balanced looking curve. So I don't see anything there that's, let me put my delta display here on as well. So 25 there, 25. Yeah, I mean, the 25 deltas are pretty much right on top of each other from a put and call. I think the calls are a little bit big, so maybe a little bias there. But again, if you were to look at this, you would say that this asset class or this product, the June, the 40-day option, it's got a pretty balanced vol curve here. It's probably got more open interest on the upside, but it's got a pretty balanced vol curve in general. And let me just go take a look at the 40-day contract so we can see where the max pain is. The max pain being the spot in the future price where people lose most of the premium. So that's down below 3, around the 293 mark for the June, 290 mark for the May. So is it about to break out? I don't know, but it's going to have a real strong breakout to get through. It's going to have some good resistance at the $3 mark, which we bounced off that, right? We haven't really surpassed that. We got close to it. I don't think we've seen it, right? I don't think we've seen. Yeah, we haven't seen $3 in a long time. Let me do one more here. Yeah, we were back there in June. So is it time for a breakout? I don't know. We got a pattern. We bounced up against 3 or near 3 for a couple times this last few months, but the skew doesn't necessarily suggest anything. It's kind of a balanced skew. Copper's pretty cheap. I don't see it getting hammered too much there. And so I don't know. I mean, that's a great answer, I'm sure, for Glen 009, and I can't remember the rest of it, 14. It's like pi. I think maybe he's a fan of pi.
Yeah, I was going to say it's 3.14159.
Yeah, 159. Maybe that's what it is. But no, dude, it's a breakout. It's and again, it's moving averages 30, 60, 90. They kind of crossed and they're all trending. Although the 30 is on a flat. It's hit the 3 a couple times in the last few months. I don't know. Nothing really suggests it one way or another. I'm sure that he would love for it to go above 3 and be significant.
Yeah, sounds like he wants a breakout. I don't know if we have any data that really reinforces that. That's not to say that the SKU's not showing it that it can't happen, obviously. I mean, look, we've seen protracted rallies in the equities for some time, and the calls are always offered to the puts there. So that's not an indicator that it can't happen.
Can't do it. My dad had a lot of sayings, and that's how I remember most of what I've learned growing my life from my dad. I always used to say, if wishes were fishes, we'd all have a fry. So I'm sorry, Glenn. Can't wish that higher.
Yeah, I mean, there's no data here that we're seeing that screams, hey, the market is prepping for a huge explosion to the upside in copper. Not to say it can't happen, but we're not seeing anything that leads us to immediately assume, oh, hey, got to get in there on some copper upside right now, because that's where the action is. Unfortunately, the action has come to a close for this episode. What a fun journey it was. We talked ags, we talked equities, we talked crude, we talked oil, we talked a little copper because of you guys. I love when you guys suggest categories. We'll get into the weeds with you. We'll go there. Live open interest updates, a hot topic. People want that. Maybe we'll get it someday. Doesn't seem like it's happening anytime soon. All sorts of stuff, Game of Thrones, all sorts of fun stuff. But before we go, Mr. Nick, if people want to check out the dark mode for themselves, they want to get dark. They want to get dark with you. How can they do it, sir?
All right, so good. Give me 3 minutes to kind of talk. I got a lot to talk about. So dark mode is available on all levels, free and subscription. There's a little, when you see three bars on the internet, you're used to it. You should see it in your browsers and all that. 3 dots or 3 bars. We call the 3-bar image. That's typically a menu, especially if you're on like mobile. We call it a hamburger. So if you look for the hamburger on the top left corner at Quick Strike, any level, you can open that up and you're going to be able to turn on the dark charts. If you just like the light white text, you can turn on just dark charts. So you can have a mixed mode or you can have a full-on dark mode. For the people that are subscribers, for the professional above and enterprise, we also now let you have multiple tabs of Quick Strike open at once within the body of the page. So you can have up to 10 tabs, so you can flip around very easily. That means Mark could have TWIFO open in as many products as he'd like at the same time and not have to flip it back and forth. He could just hit a tab. So Mark, you could probably see that up there in your little hamburger there. And just as a reminder, we still have the quick apps tools where you can buy Spread Builder or TWIFO or our Quick Options Education tool. That's $300 a month. I'm sorry, that's $300 for the year. The one tool for the entire year, $300. There's $300 and $200 subscriptions to Quick Strike themselves. But take a look at the free ones first. Always take a look at the free ones. A lot of people will be fine with that. If you need some more, take a look at the little subscriptions on the per app basis, and if you need even more, take a look at the other levels.
Look, you just got a huge discount, listeners, from $300 a month to $300 a year. What more can you ask for? What a savings!
$300 a year for TWIFO. How about that? That's not so bad. $25 a month, and you get all of the links are live, just like we are, so you could dive in and see all the details Mark talks about in terms of the volume on a per day, how much OI change, all that kind of stuff. It's all there and very easy. You can see the shift and slide, not only as a number, but graphically. I encourage you, I want you to use whatever versions that you're comfortable with and can afford. That's fine, but I think for the money, the Spread Builder and the TWIFO, you really can't go wrong at all. It's pretty cheap. And then finally, you'll see a lot of tweets out there with our stuff coming out of Macro Hedge. We've got a nice integration going with them, so take a look at Macro Hedge. They've been doing a great job with ideas, both directional and options, and they've had some great success this quarter. But our stuff is really well integrated with them, and if you're comfortable with us, you're going to be comfortable with them because that's some good stuff going on.
$300 a month is $300. I said it. $300 a year. There's a lot of platforms that charge more than $300 a month. So yeah, you get if you're trading this stuff, $300 for the year. Come on.
The TWIFO is not bad, right?
It's ridiculous. You get full dark mode. He's not even charging you more to go dark. He lets you go dark, included in the price.
That's a bonus. That's a bonus that pays dividends more than you'll ever know.
That should be at least another 10% a year, just for the coolness of the dark mode. But nope, it's included. That's the kind of guy Nick is. Check it out, Mr. Nick, Bantix.com, Quickstrike.net. Those are the places to go to register. Kick the tires, light the fires. Tell him you heard Nick on Quickstrike, or I'm sorry, on Quickstrike, on TWIFO. He'll like to hear that.
I like that.
It'll make him less of the grumpy curmudgeon and more of the happy curmudgeon in the futures options world. We all want a happy curmudgeon at the end of the day, right, Nick?
Right. I won't be so quick to to be a curmudgeon, right?
Yes, there you go. There you go. It won't be so quick. Bandtix.com, quickstrike.net, the places to go. And, of course, our buddy Sean couldn't be here today. He's off, I don't know, enjoying maybe a delicious steak in Amsterdam. There are some good steakhouses in Amsterdam. I can attest to that. So hopefully he is. Meanwhile, check him out and what the team has going on over there. FTSE Russell, FTSE Russell.com to learn more about the data, the charts, the overriding, the active versus passive analysis, all the stuff you guys like, as well as the small cap VIX and everything else. FTSERussell.com. Give him a follow on Twitter while you're at it as well, at FTSE Russell. And of course, you know where to find CME. CMEgroup.com. You can go there /TWIFO to see all the Knicks stuff. And then you kick the tires and light the fires and upgrade it if you're so inclined. And you can also check out Eric's research paper there. What's better than that? And on behalf of Mr. Nick and Sean and our buddies over there at CME and myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending us such great questions, for suggesting topics for the show. We love all that. Keep it coming. Enjoy your holiday off tomorrow. Whatever you do, you got a day off. That's nice. And we'll see you back here next week for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.